A very good evening to all the participants who have joined for today's session. The session will be conducted, it will be taken by Rishabh sir, and today's topic will be on volume versus price strategy. I hope you will enjoy today's session, and this is our last session, so make it really interesting and be interactive. Thank you. I'm handing over the session to Rishabh sir.
Thank you, ma'am, for such nice introduction. And I will present my screen. Am I audible?
Yes, sir, you're audible.
I'm presenting. Is my screen visible?
Yes, sir, it is visible.
Okay, I'm starting then.
Good evening, Vinayak sir.
Good evening, ma'am. And a very fine good evening to everyone present over here, a part of Money Barters team. All those people who have shown a passion for investment, insurance, taxation, and all about money making, guys. I think that's my one of the first interaction with all you people. And we are moving ahead with Money Barters and focusing more and more on creating the wealthy happiness. Guys, as a marketing head and as the head of the financial team, in the organization, I advise you two things. During such financial sessions, try to be communicative, try to be more acquisitive, asking the question, getting the queries to be solved. Ultimately, the more you know, the more money you make. It's all about how we expand the money benefit, how we create and multiply the money factor through our knowledge. And this is what we expect all you people to be performing in this session. We hope you will be having a knowledgeable experience and we wish that this knowledge will be surely converted into money matters. Guys, would you like to add something to my words here? Any one of you? What say, guys? Are you agreeing with my words?
Yes, sir, we agreed
Yes,
with
sir,
your
absolutely.
Yes,
words.
sir, completely agree.
Guys, just let me add one last sentence. Don't behave like a student. Students learn for knowledge. We learn to get knowledge for money making. We have extended the definition. Why we are learning? Why we are attending this session? Not for academic exam, but for the real-time exam of life, where money creates happiness. Rishabh, sir, you are the chief speaker today. Wish you all the best
Yes,
for
sir.
today's session, and you guys get ready
Thank you, sir.
for having the next level financial knowledge with money barters and career dream educations. Thank you so much, guys, and Rishabh sir, wish you all the best once again.
Thank you, sir.
Let's bang it on. Thank you so much.
Yes. So, good evening, everyone. So, I am starting with the volume versus price strategy. The first thing I wanted to tell you that volume plays a very integral role in technical analysis as it helps us to confirm trends. Consider volume as a means to gain insights into how other participants perceive the market. Volume gives us insight into the number of shares bought and sold over a given period of time. The more active the share, higher would be its volume. For example, if you if you decide to buy 100 shares of Amara Raja batteries at 785 and I decide to sell at 100 shares of Amara Raja batteries at 785, there is a price and quantity match, which results into a trade. You and I together have created a volume of 100 shares. Many people tend to assume volume count as 200, 100 brought plus 100 sell, which is not the right way to look at volumes. This is the table of I have given the example where you will see the price, volume and cumulative volume, how the cumulative volume has been calculated. At 9:30 a.m. there were 400 shares exchanged at the price of 62.20 rupees, and an hour later 500 shares were traded at 62.75 rupees. So at 10:30 a.m., if you were to check the total volume for the day, it would be 900, which is 400 of the 9:30 a.m. volume plus 500 of 10:30 a.m. volume, which is a cumulative volume total of 900, 400 plus 500. Likewise, 350 shares at 63.10 were traded at 11:30 a.m., and up to 11:30 a.m. the volume was 1250, which is equal to 400 plus 500 plus 350. The next is the demat chart volume. The The price at 1 p.m. was on the 6th of November 2018. If you notice that volume on demat chart is 2,75,121 shares. The volume information that you see here is a cumulative volume, meaning at 1 p.m. a total of 2,75,121 shares of demat were traded at various price points ranging from 1434.95 at low price to a high price of 1464.35, with with after just 2.5 hours later for the market to close. It's only a logical to expect that the volume should be increased, of course assuming that the traders to continue to trade the stock for the rest of the day. In fact, here is the another captured, like another pick for the demat of at 3:30 p.m. for the same stock with volume highlighted. As you can see, the volume for demat has increased from 2,75,000 and 121 to 6,546. Therefore, for demat, the volume of the day is 6,546 shares. It is important for you to note that the volume shown here are cumulative. Volume information on its own is quite useless. For example, we know that the volume of demat is 6 lakhs 546 share. So how useful is this information reading in isolation? If you think about it, it has no merit and hence would actually mean nothing. However, when you associate the volume information along with the price information, then the volume information becomes a lot more meaningful. Like if you see, if a price increases and the volume increases, what are the expectations? There are four kind of a certainty, four kind of a case study that has in the volume versus price strategy, in which first case is increase in volume versus increase in price. The second case is increase in price and increase in volume, decrease in volume. And the third case is decrease in price and increase in volume. And the fourth case is decrease in price and decrease in volume. Where as for the fourth case, I will discuss it much detail in the much like in the last early on stage, like in much detail, because it has a pattern inside it. So the first thing I would like to discuss, when the price increases and the along with the volume increases, the expectation is go for the bullish. Before we understand it, like we are talking about the increase in volume, what does it actually mean? What is the reference point for it? Should it be an increase in over the previous day's volume or previous week's aggregate volume? As a practice, traders usually compares the today's volume over the average of last 10 days volume. Okay, so generally the rule of thumb states that high volume means today's volume is greater than the last 10 days average volume. Average volume means that today's volume equals to last 10 days average volume. Low volume means today's volume. Sorry. To get the last 10 days average volume, all of you need to draw a moving average line from the volume bars, and the job is done. Of course, after that, calculate the last 10 days volume and make a average of 10, like calculated of if the price is ranging from 62.2 and the second days is 64 and first day is 60, then on the like summation for all 10 days upon 10, so you will get the volume average, and at the 10th day, if the volume has increased to certain level, of course from 2 lakh to 6 lakh, if we compare it by that way, then there is a certain increase in price with increase in volume. So like when for the example point of view, I will like to tell, when an institutional investor buy or sell shares, then obviously do not transact in small chunks. For example, think about LIC of India. They are one of the biggest domestic institutional investors in India. If they would buy shares of DMart, would you think they would buy 500 shares? Obviously not. They would probably buy around 1 lakh shares or even more than that. Now if they are to buy 1 lakh shares from the open market, it will start reflecting in volumes. Besides, because they are buying in a large chunk of shares, the share price also tends to go up. Usually, institutional money is referred to as the smart money. It's perceived that the smart money always make a wise move in the market compared to the retail traders. Hence, following the smart money come across as a very good idea. If both the price and the volume increase, this only one thing that means that a big player is showing interest in the stock. Going by the assumption, this smart money always make smart choice that expectation turns bullish. Hence, one should always look at buying opportunity in the stock. On the in the corollary, whenever you decide to buy, ensure that the volumes are substantial. This means that you are buying along with the smart money. This is exactly what the first row in the volume trends table indicates when expectation turns bullish. When both the volume of the price increases. Okay. So, what do you think happens? Sorry. What do you think happens when the price increase but the volume decrease? As of the second case, if we talk about. In the second case of when the price increase and volume decrease, when the price increase the volume decrease, why it is happening, like why price is increasing? Because the market participants are buying, or any other institutional buyers are associated with the price increases? Like not likely that. How would you know that there is no meaningful purchase by institutional investor? Simply if they were buying, then the volumes would have increased, not decreased. So what does an increase in price associated by decrease in volume? It means that the price increases because of small retail participation, not really influence buying. Hence, you need to cautious as this could be a possible bull trap. Going forward to the third case study of like price decrease and the volume increase, where the expectation can be bearish, as decrease in price indicates that the market participants are selling the stock. Increase in volume indicates the presence of smart money. Both events occurring together, decrease in price plus increase in volume, should imply that the smart money is selling the stock. Going by the assumption that the smart money always make the smart choices, the expectation is bearish. Hence, one should look upon at the selling opportunity in the stock market. Whenever you decide to sell, ensure that the volumes are good. This means that you are too selling along with the smart money. Moving forward for the fourth row, that about the fourth case study that I was talking about, the price decrease and the volume to decrease. In this case, it has some more detailed information, and also have a good pattern around it, and I will explain it in more detail with the pattern also, but I will give you certain idea of it, like why the price is decreasing, because the market participants are selling. Are there any institutional sellers associated with the price decreases? Not likely. How would you know that there are no meaningful sell orders by institutional investor? Simply, if they were selling, then the volume would have increased, not decreased. So, would you infer a decline in price and a decline in volume? It means that the price is decreasing because of small retail participation, not really influence selling. Hence, you need to be cautious, as this could be a possible bear trap too. Now I would like to take you some real example in the chart. that I have taken for the example for this tree. In the fourth case, I will discuss it with more detail after the pattern discussion. So the first case that I have taken is of UFO movies. And when in the first case of volume increase and price increase, you can see here the green, the volume increase with the very green color. Okay, this increase in volume indicate that there is a huge buying. And why there is a huge buying for UFO movie? Because there is a because the net sale for the UFO movie has increased from 4.43 crore in June 2021 up by 561% from 0.67 crore in June 2022. So net sell increase in net sell up to 561%. So this is a very positive news for the UFO movie, and also you can see the results in the volume also, and price increase also. So whenever if you are following the increase in volume and increasing price, there are certain other factors too you have to consider, like news are also uh, news are also like taking or following this pattern, like following this case study of volume increase or price increase. Are we are really right for this? Yes. In this case, the 561 percent of net sales has increased. We can ensure that the volume would have increased. And here you can see with a good volume of increase, from last December also you can see there is no such high volumes in the last 5 to 6 months. So here the big bullish candle you also can see with a very gap up opening. So this increase in volume with price increase in also indicates that the net sales also relate with the net sale, and also the quarterly net loss, like the EBIT data also stand negative with this, with the UFO movies. And coming back to the second and third case study, I have taken off the Indigo chart. In the Indigo chart, where volume increases but the price decreases, you can see the volume increases with the red color, which means there is a high selling of it, and the price is also decreasing. It means that like institutional smart money is selling the price, is selling the stock. It simply indicates this. And with this assumption, you can just sell off this stock price. You can see the negative bearish candle, and gap down opening is also there at this point. And with the increase in volume in a bearish way. And the third case study I have taken for the volume decrease but price is also decreases. So in this case, the volume, you can see the volumes are very less, volumes are also very less, and the price is also getting decreased. In this case, this is also a bearish pattern. And the stock price is also getting decreased. The fourth case study, I will explain it with the after explaining the pattern, like which pattern it follows. Fourth case. So the fourth case study of volume decrease and uh, sorry. So fourth case study of volume decrease and price decrease of flag formation I have taken. In this, like what is a flag formation actually mean? The flag formation is a technical analysis pattern that occurs when there is a straightforward upward move in a stock. How does the flag formation work? Flag formation movement is often nearly vertical, and at the very least is extremely steep. The move is so rapid, in fact, that on a daily chart, a trade line can't even be drawn. Typically, the move occurs very strong volume. Last a few trading days. Gap will often be present within the part of this move. This rapid upside movement is called flagpole. As you can see in the graph of this is ADP daily chart, and this is a flagpole at 24 point. You can see there is a flagpole, and volume has also increased over here. It you can see, and after that there is a gap down opening, and the flag formation is also there with a certain amount of volume decrease, and the price is also decrease. So you can see here, this is a perfect example for the 4 case of volume decreases and price also decreases. That's how the flag formation takes place. And in the fourth case study, we have described about like if the institutional buyer is interested and brought the stock for more than in a large chunk, then if the price is like after sudden increase of the volume, and after sudden increase in the volume, if smart money includes, if a big player comes into the picture, then after that there you can see the flag type shape has been covered. This means that the few retail traders are selling out the stocks, because if it is a if it is a large if it is a big player, then volume should also get increased, because even if you sell at a large chunk of price, the volume should be in a red picture, and would be higher volume should be there if institutional seller is selling, if institutional buyer or a big player or smart money is selling. But there is a lesser volume, you can see, and price is also decreasing. That simple means that the retail trader is selling the stocks. The rapid upside movement is called flagpole. Gradually, however, buyers are no longer willing to bid the stock up. Sellers, many of whom are showing extremely nice profit in a short period of time, then decide to lock in profit. But rather than sell off sharply, price declines very gradually as eager buyers who miss the initial move snap up the stocks. The flag is thought of a consolidation pattern. In this consolidation pattern, neither a bull is winning or neither a bear is winning. And in this, after the consolidation pattern, a stock typically leaves in the same way it enters. The flag is there, expected to eventually move higher. What forms after the flag pole is a flag itself. The flag part of a technical formation typically takes the shape of a parallelogram or a rectangle that is tilted on its side and is sloping downwards. Occasionally, a flag may consolidate at the top of the flagpole in a normal triangle, and more rarely, still it may slope upward. As a rectangle mature, there is a typical drop off in trading volume as the stock fades, as the hot issues and other sizzling stock with more recent news takes its place in the mind of traders. And why does the flag formation matters? Flag formation are one of the most exciting to catch for the short term traders. Typically, flag resolve to upside and can create explosive profit for swing traders. Although they do not occur frequently on chart, they are well worth for watching for. What does the like this flag formation is more preferred by the swing traders, and what does this swing traders mean actually? Swing traders like that attempts to capture the short term to medium term gains in a stock market over a period of days to several weeks. And if we want to differentiate between swing trader and day trader in a time frame, the day traders works with a short and limited time frame, whereas the swing traders work with a much longer time frame. If a trader is patient enough, then trading is better. Otherwise, the day trading is better. And swing trading, identifying swings in stocks, currencies, and commodities that takes place over a period of days is the basis of swing trading. It may take a few days to a few weeks to work out. Swing trading is less time intensive and is usually practiced on a higher time frame than day trading. And what are the pros for it? Larger target, you can get a very large target being a swing traders, and the traders practicing swing trading are not looking to make a small amount of gains, rather than they look to make one overall good trade. And the time, swing trading typically requires at least 2 to 3 hours of day trading in a day. Rest of day is free. The frequent market watch, the traders can check the market a couple of times a day or even a couple of times of a week, and there is low risk environment is there. Opening fewer position means you are less open to risk. And what are the cons for the swing trading? Like, swing trading can take weeks or even months before a trader can reach his target and close his position. Impatient traders will struggle with this. There is also an overnight risk involved with it. There is a risk of leaving position open overnight. Risks from news event, economic, political events, and natural disaster can also wipe out a lot of profit. Lot of profit. Day trading. About the day trading, comprises dozens of trades in a day on the basis of technical analysis and sophisticated charting system. The day trading traders makes a living from trading currency, stocks, or commodities by making small profit on a large number of trades and capping losses on unprofitable trades. What are the pros for it? No overnight risks are there. At trading days end, the traders sell everything. Faster compounding of earning. The earning made by the traders on an earlier day can be used the next day to make larger trades. Less capital required. In comparison with swing trading, it requires less capital. And what are the trading strategy? What are the benefits of trading strategy? As a day trader, are more likely to trade on emotion or the on the opinions of the others. The pressure to get the trades right can affect decision making. More commissions because they trade more, they need to pay more brokerage, which can bring down overall profit. And extra time, this require a trader to devotes its time in front of the screen. The main difference between swing and day trading is the time frame only. The day traders work with a very short and limited time frame, whereas the swing traders work with a much longer time frame. If the trader is patient enough, and swing trader is better, otherwise the day trading is better. And I would like to take the example for the flag formation, in which I have taken example for. I will take example for the ITC limited only. As you can see, the volume has also decreases in decreases over here, and also price is also decreases, where you can see there is a flag pole involved in the here. Flag, here is the flag pole, and here is the cap, and here is the flag portion. And this is clear indication of the flag formation. And you can see the volumes are also not have risen even after there is a consolidation in between. So this really that mean after the flagpole you can just indicate that the if a big player is in the news, then he is in he stays at there. And even after the consolidation, the price the volumes are not that great higher than if we compare up to this level or this level, or at these levels. So these are the last ITC limited examples for me. And the example that I have taken about for the UFO movie for volume increase and price increase, and the two case I have taken over here also, where volume increase and price decrease. So that's what the today's topic for volume versus price strategy, and I would like to hand over this to, if there is any question regarding with the volume versus price strategy, if anyone wants to ask this question, anyone like to ask the question? I see the no questions are there, so I would like to hand it over to Nicole ma'am. Nicole ma'am, please, you can take it over from here. Thank you, everyone.
Thank you, Rishabh, for such an amazing and informative session. I thank all the participants who joined for this meeting today for the last session. So we will be winding up this meeting right now. I will hand over to Mukul sir for some details to be given regarding tomorrow's session.
Yeah, so a very good evening to all our participants. This is a very small piece of instruction